All right, Manisha, thanks very much for that. That's commodities in focus right now. We'll take a very quick break here. The market's down 100. All right, I think we'll hold on and not take that break, but we'll go across to Mangalam. Pidilite is in focus. The stock is reacting to those numbers, not in a good way. Mangalam, take us through the numbers.
It is a weak set of numbers coming in for Pidilite. You know, for 2 quarters in a row now, the company has found itself in a bit of a sticky situation. Earlier, it was raw material inflation, and now it is lack of demand. In fact, the overall revenue of the company came in at around 3,000 crores, just shy of 3,000 crores. The street was working with a number well above that. 3150 was the CNBC-TV18 poll. EBITDA shy of 500 crores mark. We were working with a number of 580 odd crores, and the net profit as a result of which was also below expectations. Remember, the company's EBITDA margins at 16.5%, much below their always stated target of 20 to 24% band for the margins. 1% volume growth in their consumer business is also below street expectations of 3 to 4% growth. And gross margins, while they've shown a slight improvement quarter on quarter, they're still the same level as what we saw in the first quarter of this financial year. The management has attributed this weakness in the performance to high inventory built up last year same time because of imminent price hikes going forward. And gross margins, while they've improved marginally, they haven't improved as much, primarily because of the high cost inventory that they were sitting on. Demand conditions in both rural and semi-urban have been weak, and they are increasingly optimistic of the future, primarily on account of the weakness that we're seeing in raw material inflation now. So to that extent, management commentary on the way forward will be extremely crucial, given the stock has corrected about 20% from its highs.
All right, thanks a lot for that. Nazara Tech is the other one on our radar. Reema, tell us why.
Well, it's a strong set of earnings coming in from Nazara Tech. So revenue growth at 20% on a quarter-on-quarter basis, up 70% on a year-on-year basis. In fact, the revenue momentum for Nazara Technology has been strong over the last couple of quarters. Margins are down on a year-on-year basis, but they have improved on a quarter-on-quarter basis. The reason for the margin decline on a year-on-year basis is because now that things have opened up, the company is spending a lot on events, like on-ground events, content costs have gone up. So that's the reason why EBITDA margins at 9.6% is lower than the 16.3% margins that we had a year ago, but there is an improvement on a quarter-on-quarter basis. The key driver for growth for Kidopia for Nazara Tech is the gamify learning, which is that Kidopia app that they have for children, the younger children, the toddlers age group. And that had many sluggish quarters due to the change in the Apple privacy policies, etc. But things now appear to have turned around. The base also for the Kidopia business has improved. So which is why Kidopia revenues of 70% on a year-on-year basis, coupled with the price hike that the company took, has driven growth for Nazara Tech this time. Back to you.
Okay, thanks a lot for that. Kidopia, something that I've used for a very long time, and glad to be out of that phase. Let's slip into a quick break. On the other side, in our special edition of What the World Wants from Budget 2023, Lata will connect with Brian Jacobson of Allspring Global Investments. Stay tuned.